Hey, Zach. Anybody hear me?
Loud and clear.
Oh, there's Andrew. How you doing, Andrew? There's
Pretty good.
Ross.
Hello, can you hear me?
Hey, Zach. How are you?
Hey, good. How are you, Jim?
I'm doing good. Glad to see you. Hey, Andrew, and Ross, can you guys do video?
I don't have a good setup for it right now. Tried
Okay.
to order a webcam, but they've been sold out for months.
Oh, really? Yeah, I guess so. Hey, Chad. Oh, I guess it takes a minute to get the audio. Steve's
guys.
in. Hey, Chad.
Hello.
Hi, Steve.
Hey, how you doing, Jim?
Good.
How many people are going to be on tonight, do you think?
I got 12 that registered. So pretty good showing if everybody shows up. I mean, no one has anywhere else to be, right?
That's right.
I was going to be painting the town tonight, but
Yeah, right. There's Tom. Ross, can you hear us? I don't hear. Sean, you there?
Hey, I'm here. I'm finishing logging in here.
All right.
Evening, Jim. How you doing?
Gentlemen,
Good. Who is that?
That was Tom.
Oh, hey. There's Jameson. So we got, what, 9 so far. That's pretty good.
you sticking with the Jefferson there, Jimmy?
Yeah, I got the ocean going again.
Nice.
Nice.
It's my meeting beverage.
That's a good one.
Yeah. So I think we're waiting for 3 more. I saw there's, yeah. Let me just check the list here real quick. Let's see. There's Ryan. Jameson, are you on?
I'm here.
Yeah, he threw up like his glamour shot or something.
Yeah, with the bow
See
tie.
that?
Isn't that?
Yeah.
Yeah, well, you know.
All right. Ross is on a family walk, so he's going to be audio only to start, but
Nice.
he's from out of town anyway, so that's fine. Annette, did I see you? Are you on or off? Oh, she was here.
Yeah, she was there a second ago.
All right, well, wait just a couple of minutes, guys, just to make sure everybody who wanted to be on here can get on here. And I'm going to see if I can see who all we have 15 registered now, so we should have. Yeah, some people just registered, so I think they should be logging in here. That's great. Mark, Katie is not here. Oh, and Joe's the only one that won't be here because he just had a baby, I think. I know. Saw a picture of him. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We'll wait just a couple more minutes.
Jim, is that your quarantine beard?
Yes, it is.
It's serious, dude. You've been doing some hard work there.
I'm doing hard time in my house. I gotta,
Have some sort of goal to accomplish.
Yes. Well, now that I don't have to leave my house or put pants on, I figured I could grow a beard.
Okay, I like it. Keep it. I'm excited to see the progress.
Yeah, and you can't see how lame it is unless you're, not on video. So, well, maybe you can see how lame it is, but my kids and wife make fun of it all the time.
No, it looks pretty serious on Zoom. So
thank you. That's good.
It's going strong. It's going strong. Thanks for putting this together too, by the way.
Oh, no worries. I'm glad we could do it.
just don't stay.
So if you're not wearing pants, please don't stand up during this session tonight, please.
I'm kidding. I'm wearing pants. It's who's the guy from The Office, Jim? Did you guys see his videos?
Yeah.
Yeah, the good news videos.
The good news, and every time at the
Yeah.
very end he stands up, and the first time he had like shorts on, the next time he had like a tutu. It's pretty funny. I won't be doing that. Don't worry.
Chicken.
Exactly. Yeah. All right. Well, we might as well get started. There may be some other people clicking in here. I haven't gotten any. Let me check my email just to make sure if somebody else is having technical problems. Doesn't look like I got anything. So I just want to kind of go over the rough agenda for this meeting, and then basically it's just going to be intros. I don't have a grand vision for this. It's kind of how Coin started. Wanted to get together with a group of people who kind of have the same ideas, same visions, or some of the same goals, some shared ideas, and just see where it takes us. And with Coin, oh, hey, Melissa.
Hey there.
With Coin, that took me or us much farther than I thought it would go. And, we'll see how this goes. So basically the agenda is I want to talk briefly about the purpose of the group. Then everyone can introduce themselves, and then we can do some questions and answers, because, I've met all of you at one time or another. And, I know that Steve and I are really the only ones that have done any significant investing in syndications and in passive investments. And so at the end, we'll do kind of question and answer if people have questions for Steve and I. Steve has great knowledge. He's been doing this longer than I have. And so what I'd like to do is start with just talking about the purpose, like I said, connecting with other people who want to do passive investing, share some best practices and expertise. Like I've learned a lot already from Steve, and it was really interesting that he had some of the same investments, was using the same syndicators I was, which just gives you validation. Someone else has a big chunk of money with this person, and it makes you feel like, all right, Steve's a smart guy. At least I did something right. And then, share investment types, strategies, and different syndicators. So one of the things Steve and I have been doing a little bit is comparing, oh, you invest with this company or this guy, what do you think? And he's putting together a list of syndicators, and you've seen some of that. I'm doing the same thing, and eventually we can kind of compare and contrast. So that's the other thing I'd like to get out of this. And then possibly, I'm not, I don't know if this is something people will want to do. I'm ambivalent about it, but I could see where this could turn into some of us investing together. I'm affiliated, I invested in a company called TribeVest that I've talked to many of you about. Annette is involved with TribeVest. I'm in 2 different tribes that are already investing in syndications together. And it just makes it easier because most of these syndications are between 25 and 100 grand each time you want to get in. And, to be able to do enough of those to get some diversification, not just by investment type, but by syndicator and location, it's a lot to keep throwing out 25, 50, 100 grand chunks. So there's a group where we have 5 of us and we each throw 5 grand in every time. And that just makes it a lot more manageable to get into more investments. We can talk about that as we get going. So what I'd like to do is start kind of go around the room. And if you could just say, we can see your name. So just kind of introduce yourself, say what your main occupation is. Talk a little bit about your investment experience, including if you've done any alternative meaning real estate and, anything outside of the stock market type stuff. And then stocks, real estate syndications, any current passive investments, syndications that you're doing, and then your goals for passive investing or strategy, what you're trying to get into. If some of you I know are just getting into it, and you might not even know what you want. You just want to be in this group to learn, and that's fine too. And then if you have any goals or ideas for what you'd like to get out of the group. Obviously I would love to be at the the Cap City Diner with you guys, sitting and having a beer and talking together. I think but we're going to make do and get the most out of this. And today is just kind of an intro meeting. We don't need to go deep into it. I'm going to let somebody else go first, but when we get around to, I think Steve and I will go last, because I think it'll take us a little bit longer. And Steve, what I'd like to do for us is kind of just, I'm going to go through all of the syndications I'm currently in, not by each individual syndication, but by type, this many multifamilies, this many self-storage, that kind of thing, just to give people an idea of what's out there. And then I'm going to talk about my strategies and things like that. So if we can, we'll start up, Zach, I'm going to put you on the spot since you're on the top left, at least of my screen. If you can just introduce yourself and then talk a little bit about your experience and what you're looking for.
Yeah. Hi, everybody. Zach Warder. Jim and I have met through Ultimate Frisbee in Columbus. Played together a number of years now. So that's how I know him and how I'm even involved today. I've been to, I first heard about the Coin Group, and I attended just one of those so far, actually, several months ago when Jim was the key speaker at that. And then, he mentioned about this group, and I was interested definitely in just, I guess, participating and seeing where it goes. My day job is I work on multifamily lending. I'm a senior analyst with a senior banker. And, we just go out and finance market rate, student housing. Our company does all different aspects, but it's all housing. Anywhere from $1 million or so loan on the low side to infinite upside. So that's what I do day to day, help just crunch numbers, deal with clients. So I've developed some interest. I've worked for my company. I work for, we're now called Oryx Real Estate Capital. It was Red Capital Group, headquartered in Columbus. It's been around for 20 years or so. I've been there for a little over 15. I did accounting for the first 9, and then they moved the accounting department to Dallas when Oryx bought us. And I've been now for about 6 or 7 years. I've been working on this, on the actual business side of our company. So that's what I do daily. Let's see, I've got, as far as current investing, the only thing I've done so far, my wife and I invested some money. My boss, the senior originator, he's got a business partner, and he's been investing since the mid 2000s in multifamily. So he ended up a couple years ago now, he purchased a 52 unit property in Hilliard and asked some of the guys at work if we wanted to just be passive equity investors in that. So we put some money into that. That's all. And that's given us like a 10% annual return, which is nice. Or so. And then, so I wanted, if he was constantly buying and asking us to get in with him, I'd like to continue doing that, but I don't see that being a sure thing. So looking to get into more, probably multifamily. I don't know. I've not really ever considered getting in different other types of commercial real estate as far as investing. So what else did you ask for, Jim? Anything?
Just if you had any goals for being in the group, or ideas for the group, if you have something. If not, that's fine.
I don't know. I'm not sure. Not necessarily ideas at the moment. I don't know what my goals are. I mean, I'd like to get some more money invested in the next couple of years, kind of get into something else again.
Yeah.
Like Joe who just had a baby last night. I'm about to have a second this month sometime. So that may pause things a little bit, but I didn't want to stay out of the group because of it.
Right. Okay.
So.
Well, cool. Thank you. We'll move on to Chad. If you can tell us a little bit about yourself, and then it's just like Zach did. That was perfect.
Sure. No, Chad Ackerman. I've got a W-2 job at Huntington Bank these days. I started back in May. Prior to Huntington Bank, I was at Cardinal Health for 11 years. Lived in Dublin, worked in Dublin, so it was very close. It worked out kind of convenient. Huntington came courting and kept saying yes to all the questions I had, so I took the job. And the commute is really what got me into the real estate world, because I started listening to Audible books and educating myself on it, and it sucked me in. So I've only bought personal houses in my lifetime. I don't have anything I've invested in, but I've thrown myself in. I made a bunch of offers in November, December timeframe that just didn't stick on single families and duplexes. So I've at least progressed to the point where I'm making offers that I'm excited about. So, and then I've thrown myself, I'm that typical newbie. I'm like chasing every shiny object that's out there. So I've listened to, or I was going to go attend the Secrets of Successful Syndications by the real estate guys. That was a week ago. That just didn't happen, obviously, because nobody's going anywhere these days. But they did do a Zoom meeting, which wasn't near as good as I'm sure as being there in person, but it was very educational. And so that has me excited as well to scratch the surface on this side of things. So I've got an IRA, I've got a 401k, I've got an IRA. I moved my IRA over to a self-directed that I'm ready to play with. And I wanted to just kind of spread it around. You take a loan on it so I can do some cash and take some profit from it. But also invest it in something more fun than just my IRA and watch it grow for several months, years, whatever. So I'm hoping to get involved with the group, see where I can utilize some of that capital. I have a feeling there's going to be a lot of capital just sitting, waiting these days. So
Yeah.
I want to see where that takes me. I keep getting excited to go get involved in something, and then I'll pause myself, say, no, wait, we need to wait and see what happens, and be patient with it. So I'm trying not to chase every car that goes down the street right now, but I found Coin. I found it interesting. I don't know. I've been to 4 or 5 of them, I think now, and I've met a few of you at those meetings. I always found it interesting that it seemed like after the speakers got done, nobody went and talked to the speakers, it seemed like. So I started doing that, and that's how I met Jim, to just say, hey, I'm interested in this stuff. You're doing what I want to do. Can I pick your brain? So it's kind of spun to be that. So I at least try to do that. If I'm not buying houses or properties yet, I'm at least trying to get the ducks in a row.
Yeah. Cool. I think I told you this, Chad, but just for the rest of you, I did go to the Secrets of Successful Syndication meeting a couple years ago. And that is when I went there thinking I wanted to be a syndicator, meaning I wanted to buy the assets. I wanted to go find people to invest with me. And I left there saying, I don't want any part of that, because I met a bunch of people who do that, and I want to invest in their syndications. And you also hit a note with the shiny object. When I had a self-directed IRA that I was just dying to invest in syndications, and it allowed me to take bigger risks because I can't use that money for a while anyways. And so I did a whole bunch of shiny objects, some of which I'm like, what the hell was I thinking? Now that I know a little bit more, but so I hear you on that stuff for sure. So thanks, Chad. We'll move on to Tom, if you want to go next.
Sure thing. Let me unmute myself. Holler if you can't hear me.
I got you.
So Tom Gasels, nice to meet you guys. I've seen some of you at the Coin meeting, and I know Jim, you and I, and Steve, we've had a couple conversations along the way. But a little bit about me: I do have a W-2 job as well. I've been at Ohio State, actually the Wexner Medical Center, for almost 7 years now. I lead one of the IT groups there at the health plan. And then before that, Chad, your name seems familiar, but I was at Cardinal Health for about 15 years before that. So maybe we should connect up and just kind of compare some stories.
We very well could have crossed paths. I supported IT for a little while.
Okay, great. But so from a real estate investment perspective, about 6 years or so ago, I finally dove in head first and bought my first rental property. So that's, since then that was a single family. And at this point, before the holidays, I had 13 units. I sold a duplex right before the holidays, so now I'm down to 11. I have 1 duplex and 9 single family. Some of these have been cash only buys, and then, once I get it, the Burr method, once I get it, rehabbed and then rented out, then I go out and refinance, and I take that money and I do the next deal as well. So I've done a couple of those. I would say over half of them are Section 8. The other half are open market. What else? So I'm still, looking for single family homes that continue to show good numbers. So my philosophy, at least up to this point, has been buy and hold for sure. I think that's, at least so far, has been a pretty good strategy for me to get some good passive income. However, it's not so passive sometimes. So that's why I'm here. I want to collaborate more with you guys to talk about, how can we do more of these, get involved in the syndications and some of the other things. What else? I do have a self-directed IRA. Actually, I took my Cardinal Health 401k and rolled it over to Equity Trust. So I now do some things with Equity Trust for self-directed. And that, so far, it's been a learning experience, but so far it's opened up some opportunities for sure. What else? But I definitely am looking to, use that self-directed for either lending, or if there's any other passive investments that make sense to invest in a self-directed IRA, I definitely want to do that as well. But I do have an interest in, more passive investments. I know, Jim, that you introduced me to Buck Joffrey's whole series and the Western Wealth Capital and his whole portfolio of companies. Since then, I've signed up, and I'm now on his whatever his list is called, the Investor Club list or whatever. But have had a personal call with him and been on a number of his marketing and other educational WebEx shows here recently. A couple that I'm interested in. One is it's called Life Settlements. So I don't know if you guys have had any experience, Jim or Steve or anybody else, on that as a passive investment. And then in addition to his other multifamily deals, and there's some in Phoenix and then some in Atlanta that he's recently pitched. I'm definitely interested to hear more about how that's going to play out, especially with the economy the way it is now, and if that has any impact on it. So that's kind of a little bit of spiel, from my perspective. What I want to get out of the group is just, networking, collaboration, trying to learn from each other. And then I like the idea of, maybe even investing together as well.
Cool. Yeah, the life settlements is funny. I looked at those about a year ago, and I kind of backed off, and then I revisited it. I got the paperwork, and in the next month or so, I'm going to do life settlements. If people don't know what that is, basically, there's many different ways to do it, but it's people who are, usually in their 80s, late 70s, up to the 80s, who have a permanent life insurance policy, and it might have not a whole lot of cash value, and they have to they keep having to make premium payments, but they have a big death benefit. So say it's a $5 million death benefit, and they don't need the death benefit anymore. So they will sell that policy to a life settlements company for $1 million, $2 million, whatever. And that company then will pay the premiums, and it's kind of morbid, but wait for them to die, and then collect the death benefit. So, and this is even more morbid, but in the current situation, these as investments are sadly expected to perform probably even a little bit better, because of how the coronavirus is affecting people. I know that's sad to say, but it's that's just part of the deal. So and a lot of the stuff that I'm doing is through Buck Joffrey, the podcaster, and he has a group that he does life settlements from. There's some that do huge funds where they have just thousands of policies. They do a more targeted approach where they have a fund with up to 10 policies in it. And so, yeah, sorry to go off on a tangent, but as we're going through this, if someone has a question or wants to go off on a tangent, please do, interject. I know it's hard in this format, but remember, we would have been at a restaurant where it's not just always one person talking. So if you have something to say, try to work your way in there. So, all right, we'll move on to Sean, who is somewhere in the Caribbean on a boat.
Boy, do I wish. I'm Sean Donnelly.
You look like a castaway.
Yeah, that's more suiting for me for sure. Sean Donnelly and Jim and I go back to his one of his W-2 jobs, probably almost 20 years ago. We were working for a Warren Buffett company at that time. Jim got out. I stayed in, and in 2007, there were several of us that left that Warren Buffett company to start our own company under the industry, the reinsurance industry. So my company supplies insurance to insurance companies on multi-million-dollar properties. So if you think about it from a risk transfer standpoint, more so when national catastrophes happen, that's when we get involved. So that's my W-2. My real estate investing goes back to 2001 when I did not know a lick of what I was doing, and a buddy and I started an LLC, and we got into the flip business. And if you think back to what happened in 2007, 2008, it was definitely not a lot of fun. So we took a bath, but it was a huge learning opportunity for me. So I chalked it up as a crash course that I just dumped money into, but I took out a lot of lessons from. And then Jim and I reconnected. So we were playing around with that a little bit. And then Jim and I connected, I don't know, maybe 10 years ago or so, reconnected. And I was just telling them, we were talking about real estate and life insurance and a bunch of different things, and went down the path of getting into multifamily. So I've got several multifamily duplexes kind of all over the city, not in, certainly not in Dublin, not in Upper Arlington. They're in some questionable areas, but they're working out pretty well. And then I've got a single family home over in Hilliard as well. And, just with Jim and I having the connection and the relationship that we have, we're constantly communicating. So as my frustrations with the rental properties not being as passive as I would like, as well as some property management, minor issues here and there, we started talking about passive investing. This was probably 12 to 18 months ago or so. So it had always been on my radar since those conversations with Jim. And I made it a goal for myself in 2020 to really jump in after doing more research and having some more communication with Jim to do that. So Tom mentioned Buck, Jim mentioned Buck. I'm sure it'll come up more than once in this call. I jumped in his two most recent offerings, one in Atlanta, Georgia, and the other is Houston. And what's interesting is the Houston one is supposed to close very soon, but they're trying to figure things out given what's happening. And then today we just got word that the Atlanta, Georgia one is going to not close with the original date, that they moved the date because of what's going on. So they're taking a sort of a wait and see. They hope that it will happen, but it's going to take some time. So I feel like I've been rambling, not answering any of Jim's initial questions. I would say, Jim knows this better, and Jameson as well knows this better than anybody on this call. I'm always looking for knowledge, probably no different than the rest of you on this call. So that is certainly why I'm here. It's a goal in 2020 to get more involved in the passive investing, like I said. So for me, this is all about knowledge and being around people that are doing it, want to do it, and try to capitalize on that momentum and that knowledge. So that's why I'm here, and that's why I want to be a part of it.
Perfect. Awesome. Thank you. All right, we'll move on to Jameson.
Hello, Jameson Lett. I don't remember what the questions were, so I'll just start rambling like Sean did. I met Jim 5-6 years ago, maybe. We also worked together for a little while. So when it comes to real estate investing, I have basically the least amount of firsthand experience of anyone probably in this call, and probably the most amount of secondhand experience. So most of the investing that I do, or that comes into the real estate world, is typically through my clients. I'm a financial advisor, and so years ago, before I even met Jim, I started working with real estate investors. And around that time, I also realized that the stuff that I did for my clients, which as important as I think the individual investments are, the advice is one thing, but stocks and bonds, I think, are important tools. But as everyone here knows, they're not the only thing. So as I started learning more about the things you can do with stocks, for example, that are pretty cool, that create leverage and arbitrage and things like that, I also started learning about real estate and how that works, and through my clients mostly. And so over the years, I've just worked with more people kind of with that sort of mindset. We tend to think alike, and I like, because I'm like Sean was saying, I'm always learning. And so I've learned that it's not as passive as people originally think, and I didn't have to buy any real estate to learn that, so I'm happy about it. I've been close to getting in on a few different occasions, but every time in that close, I analyze if I put this money into a single family, or I mean even just maybe a multifamily, but kind of like a starter rental property or something. And then I look at putting it back into my business. So not a W-2 employee, but I have a full-time occupation. It's just always better to put it in my business. So I know that's not always going to be true. And I'm looking forward to sort of branching out from those traditional investments personally, but also it makes me a better advisor. I think the more I understand about how all of this side works, I'm not going to become a Buck Joffrey, who I don't know, but I now know his name. I'm not going to be advising or teaching people about real estate syndications and stuff like that. But if I can better understand how my clients view those opportunities and how they can get connected, if I know people like you who they can plug in with, then I just think that's better for me. That's better for them. It's better for all of us, really. So.
Cool. All right. Thanks, Jameson. Annette, if you're ready.
Sure. Always ready. Hello, everyone. Annette Grant. I met Jim at Coin also, and he is a wealth of knowledge, and I'm super thankful for everything that you do for everybody. So just shout out to Jim for putting Coin and this together. And then as Jim mentioned, we are in a tribe together at TribeVest. I'm not in one of the syndication tribes, but I will be one day. And so our tribe is just saving money right now for our first investment. And if you, like Jim said, if you have any questions about TribeVest, be more than happy to chat about it, because I'm also a brand ambassador for them, and just think what they're doing over there is going to change people's lives. So I am not a W-2 employee. I am a short-term rental expert. I host a podcast called Thanks for Visiting. And so I live in the short-term rental world, Airbnb, to give you another term for it. And been doing that for a couple of years, and I do not own property, but I work with developers. And I work with some bigger developers in town, and then I work a deal with them about co-hosting their properties that they own. It's been great for me. It was the number one question friends, family, acquaintances have asked me about the past 3 years. And now I'm teaching online courses about the short-term rental world. So I live in the internet space. I worked for a company here locally for like 8 years before I left there 3 years ago. And we sold, it's called Homage. I'm sure some of you have heard of it, and helped build that brand. And I saw what the power of the internet and selling things online, but there is, that is inventory. And now I'm selling digital products online, and I do not have to deal with inventory, and it's a beautiful thing. And that is why I'm drawn to the passive investing. I trade my own stock portfolio, and that's when I bet on myself, it normally goes pretty good, but I want to switch into this world. I'm not switch, but keep those funds there, but start to diversify that. And that's what my goal is here, is to meet other like-minded individuals. Hopefully, like Jim was saying, maybe it's something we can all invest together. And lastly, to learn. And I just think things are more fun as a team. So, and I think you can go much further, much faster when there is a team, shared knowledge, and shared experiences there. So I'm glad to be here. And I just want to say thanks to Jim again for putting this together.
Cool. Thanks, Annette. And next, Melissa, it's kind of dark. I think I can see you. You want to go next?
Hey there. I've turned on every light I can. So sorry, it's
No
not
worries.
brighter. Melissa Gayhart, and my husband is Gabe, and we purchased our a duplex in November. So that was our first leap, and I think our next goal is moving to the, what's it called? Self-directed IRA. Yeah. Self-directed IRA. Beyond that, our goal is just to gain as much knowledge as we can, and hopefully get to a point where maybe we can be sharing knowledge. So yeah, Jim, thank you so much for putting this together and what you've shared so far, and we just look forward to learning and getting to know you all better.
Cool. Thank you. So Brian, you're up next. I know you joined a little bit late. Basically, you probably figured it out. We're introducing ourselves, kind of talk a little bit about what you do and what your goals are for the group, and if you're doing any passive investing or what kind you'd like to do. If just kind of copy what other people did.
Yep. So Brian Meyer, and sorry I was late. I missed a lot of the intros. I have two very little girls that aren't always they're not great listeners around bedtime, so sometimes it runs long. So tonight was one of those nights. But I've been investing in multifamily and single family homes for like the last 2 years with another partner of ours. And we're up to 10 units, about 16 doors, and even with property managers have realized that it's very much not passive. And so was at a coin meeting last year, I think maybe in Q4, heard Jim talking about his story, some of the passive investing he was doing, and followed up with him to learn a little more, and was really intrigued by the multifamily syndication and other passive avenues he's using with self-directed IRA and investing in notes and other things, and had a chance to connect with Steve a little bit as well. And very grateful that you guys put this group together. I'm really excited to learn more about this passive side to continue to grow, investing in real estate, but much more passive than the last 2 years have been for us.
Cool. All right, thanks, Brian. And then Ross, it looks like you're back from your walk. Ross is the only one of us that probably wouldn't have come to the dinner because he lives in Kentucky. He's the brother-in-law of one of my neighbors, so that's how kind of we connected. But Ross, if you can jump on and tell a little about yourself.
Thanks, Jim. Yeah, hey guys, Ross Clausing, Northern Kentucky, or Cincinnati. I'm just over the river, so down south of you guys. But met Jim through my brother-in-law, as he stated, and almost no experience in financial background in terms of investment. I'm a medical device sales rep by trade during the day, medical background as well. So, getting into a point where I've got a family, I've got some income that, I'd like to grow. And passive seems like a decent way. My hours week to week, day to day can fluctuate quite a bit. So, to put the money somewhere and have it working, and getting together with some brighter minds and better beards than mine sounds like a good plan.
I'm not sure you're in the right place, but you'll figure that out, I guess.
Yeah, man.
What qualifies you as the beard?
Yeah, exactly.
Jim is the beard.
Yeah, it won't be here. Next time you guys see me in person, it'll be gone. Don't worry. Don't want to scare anybody. All right. Thanks, Ross. Ryan, You want to take it away?
Sorry about that. My name is Ryan Mainwaring. Background on me is I met Jim at a couple coin meetings ago. I currently work at Nationwide in IT in the cloud department. And then for real estate, started about 3.5 years ago, started a company up with a partner, bought my first property about a year into that. Now we're up to 8 or 9 properties, most single families and a duplex. So that's kind of the backstory on who I am and what we've been doing. What I kind of hoping here is to kind of diversify, like everyone else has said, looking for more of a passive approach, and also as try to get to the financial freedom goal in the next 5 years. I'd like to have some diversity in the portfolio outside of the stock portfolio. So that's kind of background on me, short and sweet. I know we're running a little short on time, so I don't want to take up so much.
Perfect. Thank you. And Andrew, you're up.
All right, Andrew Sealing. My day job, I'm in the cloud DevOps SRE space at Nationwide. So that's how I met Ryan. And he pulled me into this. Passive investment wise, I've been doing index funds for years. And then early 2019, Ryan came to me with an opportunity to fund one of his buy and flips, which I funded. Things went well. We started working together a little bit more. And then mid last year or so, the opportunity came up to buy out his partner. So I joined him in that business. So my main goals, I guess, learn about syndication in general. Right now, since we're both W-2, mostly from a passive standpoint, but also kind of learning what does it look like also from the active perspective as a potential thing down the road as we work towards financial independence.
Cool. All right. Thank you, Andrew. And now I'll turn it over to Steve, just to give a little bit of an overview. Before I do that, Steve and I are similar in that we've done quite a few passive syndication investments. He's a little bit different, as I think, and you can correct me, Steve, but he's more for he's not looking for cash flow as much as I am. And most of my syndications now are not necessarily targeted towards cash flow, but that's my new goal because I don't have a W-2 anymore. I'm doing this 100%, just investing in syndications and passive investing as a way of earning income. So I'm turning my focus to more cash flow investing. I think Steve, because he has a good W-2 job, is less focused on that than I am, I think. So Steve, my plan, I'll go after you, but I'm just going to talk about, mention the syndications I'm in, talk a little bit about my strategy and what I'm doing. And then if we have questions, people, you can jump in or wait till the end after Steve and I kind of give our spiel, but go ahead, Steve.
Okay, sure. Yeah, thanks, Jim. Thanks for setting this up, Jim. So I'm an ophthalmologist, so I look at eyes all day long, and then at night I look at syndications pretty much. So, to give you some background about my real estate experience, I was doing a lot of day trading of stocks, or in my case, night trading of stocks back in the tech boom, and pretty much lost all that money, and that didn't work very well for me. And then 2008, I handed all my money before that to someone who hopefully knew what they were doing, and then lost about 40% of my money there in 2008. I was like, this isn't quite working the way I wanted it to, and I didn't want to be working until I'm 75. So I decided to look into other avenues in terms of investments and be a little bit more active, but not in the stock market per se. So I started studying about real estate, mainly in about 2008 or so. I actually took that Rich Dad course, if you guys remember that. My first foray into real estate was a commercial property, which is actually our own property that our practice is located in Westerville. Of course, we still own that as well. But in terms of chasing the shiny object, like Chad was saying, I've done pretty much one of almost everything. I owned one single family home. It was a turnkey, but not really turnkey. I sold that last year. I bought one duplex. I still own that, and that's actually a college rental at Oxford, Ohio. My son goes there, so he actually lives there now. And then I bought a fourplex and ended up selling that on terms to John Horner, which you guys know, and that's how I got hooked up with the coin meetings. I did one tax lien, which was like watching paint dry and pretty boring. Let's see, what else did I do? I did, actually, I don't think I told you this, Jim, but one of my first syndications was actually a movie that I invested in. It's called One Heart. It still hasn't come out 10 years later, but it's supposed to come out this fall. It's a high school football movie. It's supposed to be inspirational, hopefully. But it's supposed to come out this fall when hopefully there's a football season. when it comes. But if not, you can catch that movie. It's based on a high school in Texas. And then let me pull up my notes here. I did do some oil and gas. So if you guys have some interest in that, I pretty much lost my shirt on that. This is when I was pretty naive about syndications. This was 09, I think 2009, 2010. Invested in like 20,000 here and there in this with this person. Ended up being pretty much a Ponzi scheme. So lost all my money in that. So oil and gas is actually not a bad investment if you know kind of what you're doing and you're with a good syndicator. It is one of the two investments that I know of that can actually offset W-2 income. So, and actually in the first year, you can get 100% bonus depreciation, passive losses from that. And the other one is, I think, conservation easements. And then let's see here, what else? I've done some private lending to some flippers like John Horner. Again, kind of got out of that business as well. So probably around 2018 or so, I kind of got more serious into syndications. In 2014, I did go to that Real Estate Guys Secret Successful Syndication meeting. Met some good people there. And yeah, I kind of thought, well, I don't know if syndications for me, it does take a lot of time. Certainly you can make a lot of money doing that, but with my job, I'm not really looking to retire. I don't know about some of you, but I'm not looking to retire tomorrow, but I enjoy what I do and the things I do for patients. But I did go to one more syndication meeting. It's you may have heard of Brad Sumrock. He hosts one of the largest multifamily syndication meetings. He has I think it's like $299 course. I think when I went, it was $99 back in 2016. And there are probably like 200 students there. And of course, he has this coaching program and that kind of thing. But ironically, Buck Joffrey was actually at that meeting. And he was kind of learning about that as well. And so he's kind of taken off from there. And the other guy that I just learned about who was at that meeting, at the same exact meeting I was Lane Kawaoka from Hawaii. He's a big syndicator as well. So it's kind of funny that those guys 4 years ago were doing what I was maybe wanting to do. But so if you guys have an interest, but I think Brad Sumrock's program is good. I bought one of his lower tier programs for a few $1,000s and learned a lot about apartment, what to look for and that kind of thing. But that would be, if you were to go to one syndication meeting, I would actually suggest that one based on my experience. So in terms of what I have now, let me pull up my notes here. I am actually signed on 19 syndications. 6 of them are multifamily. I've got 3 in what I call kind of the resort space. I have a resort syndication in Puerto Rico, one in Costa Rica, which I actually visited in February. Then one in New Jersey, which is a winery, resort, wedding destination, and has a golf course as well. So I did that as well. And then I'm involved in 2 syndications for self-storage. One tech, back in 2015, 16, I invested in a small amount in one tech startup. Let's see, this year I did one retail center. And let's see, and then my crown jewel is the Broadway show that I'm invested in. It's called Moulin Rouge. There was a movie probably like 16, 17 years ago. Nicole Kidman was in it. But now it's a Broadway show. Of course, it's not playing now, but I invested in that in 2018. It's actually been my best investment. It is a risky investment. According to Erica, who's the syndicator, she said that about 1 in 5 you'll actually recoup your money. This one has done very, very well. It opened on Broadway in July. It had a short run the summer before in Boston. As of the close of, I think, first quarter, it was actually the second highest average ticket sale. So I was actually on track to get all my money back by the fall, but I'm not sure about now. Maybe it'll be more like Q4. So I have a pretty varied syndication portfolio. I'm happy to go into some more details about some of them. But it's, I guess, one goal for me with this group is to certainly meet a bunch of like-minded people, but also to flatten your learning curve, as they've been saying, flatten the curve, right? Because I made a lot of mistakes. I mean, that oil and gas thing, that really soured me on syndications for a long time, and I didn't get back into it until probably 6-7 years later. But I think if you really vet your sponsors well, ask a lot of questions, talk to people who invested with them, that kind of thing, I think that you'll avoid a lot of pitfalls. And if you invest in solid investments like multifamily or self-storage, I think you really can't go wrong in many cases, unless the operator is horrible or if they have a property manager that's just not doing a good job. So is there anything else, Jim, that I need to talk about? Or
You're muted, Jim.
Yeah, I was talking and I was muted. Sorry about that. No, I think that covers it. Does anybody have any questions right now for Steve, or I can kind of give my little synopsis, and then maybe we can open up for questions then. Are there any questions now?
I do have a quick question for Steve. So Steve, is your focus primarily cash flow, or is it appreciation, or what's your focus with your passive investments?
Yeah. Oh, sorry. Someone's printing something by my printer here. Sorry. Yeah. My goal right now, I don't, like I said, I don't plan to retire for at least another 10 years or so. So my goal is to I don't need the cash flow, I guess, to answer your question. My goal is to make as much in terms of appreciation as possible. And so I'm looking for deals where there's a lot of value add. Which means they're going to gut the units, or they're going to add a lot of nice counters and that kind of thing to the kitchens, and add washers and dryers and that kind of thing, and other revenue sources. So that's my goal right now, is to just build my. Well, I hate to say golden egg, but I think I may have mentioned my goal is to have a bunch of golden geese to lay a bunch of little golden eggs, I guess, and then kind of build it that way. It's kind of like a snowball effect. With I'm still in the stock market in my 401k. I scaled back a lot from that, and like I said, in 2008 I lost about 40%. I looked at I have a big spreadsheet now with all my investments, including my retirement, and so far I've only lost about 4 or 5%. So I'm pretty happy about that. Just by diversifying out of the market, I think I've hopefully I'll meet my target retirement goal here.
Great, thanks.
Any other questions for Steve? We can ask more later. Any more right now?
Yeah, I've got, I'll just jump in real quick. And Steve, you don't need to answer this right now, but maybe later I'll give you some time to think about it. You mentioned oil and gas, and that's timely because Buck just sent out a webinar for Friday on oil and gas. So I don't know if, again, you don't need to comment on it now, but I'd love to get your take maybe later after you've had some time to think about it, or if you've already thought about it and you have some thoughts now, that'd be great.
Yeah, I'm actually signed up for that webinar as well. So I'm interested in learning a little bit about their company. The company that I was with was pure drilling, and it was just pure speculation, in other words. So it's kind of like the stock market in a way, but it was all or nothing. So with I think it's called Resolute Capital or something like that they're with. I believe they have pre-existing oil wells already, so you're investing in something that's already producing oil and gas, and then there's also the drilling component. So, but yeah, I'm with you. I still want to learn about it, but I'm a little leery about it just because of what's happened. But the stock market killed me as well, and I'm still in the stock market.
Yeah.
Good point.
And one thing I left out in all of my bio, if you will, my intros, I got into, much like you, Steve, I got into a fracking deal back in 2000. This was right in that same time frame, 2008, 2009, and it went incredibly south on myself and my two partners, and we lost a buttload of money. So for me to get back in the oil and gas sector, I'm certainly going to tiptoe in it because of the bad taste that investment left in my mouth. But I'm also signed up for Friday just because, again, looking for the knowledge, and maybe there's one out there that'll make me feel a little bit differently about my previous experience.
Yeah, Resolute. I listened to their webinar about a year ago, and I actually did a call with the partners and talked to them. And I just didn't pull the trigger because I was into so many things last year, just trying to figure out what I wanted to invest in. And it's really great for you people that have W-2 income because you can write that off. But they have a totally different approach than the typical boom bust oil guys, and it really felt like talking to them that that they had a really good chance of being successful. I liked the way they did it. They had two different funds. You can do lending or you can do equity positions. So there's a couple different ways to get at it. But I'm definitely going to listen to that as well, and I might pull the trigger on the oil and gas also. Any other questions for Steve? And again, we can go back to it. All right, so you guys have heard me talk many times, so I'm not going to go over my whole story, but I did just kind of want to tell you guys what I'm invested in, and there's kind of two buckets. I have my my qualified money, which is in my self-directed IRA, which is now actually a self-directed 401k called an EQRP, and that's so I don't have the UBIT, which comes if you have leverage in your self-directed IRA, you owe UBIT, and there's another one, I forget what the other one is, but there's two. You might owe some tax even though it's a self-directed qualified money. But that was the first one that I had when the first syndications I did. I had this bucket of money from the old job I worked with Sean, and I just kind of went on a buying spree after the real estate guys syndication seminar. I met all these syndicators. I'm like, I'll have one of those, one of those, one of those. And I didn't put a whole lot of thought into how it fit into my strategy. And so now my strategy has changed where I have, my qualified money is for appreciation, long-term stuff, higher risk, and all lending. I want to do all lending out of there because there's no tax benefits. My after-tax stuff, which is where I'm trying to get my cash flow now, I started it for appreciation, but now I'm going for cash flow. That's where like I said, cash flow, the velocity of money where I can recycle money by putting it in a syndication, getting the money back out of that syndication quickly while still owning the syndication, and then tax efficiencies. So in the qualified money, I have, in Belize, there's a chocolate farm. I have a coffee farm in Panama. I did 2 loans for cannabis, one in Oregon, one in California. Those are severely delayed, so I don't know how those are going to work out. I got a mobile home park in Alabama. That's one of the ones that I should have put after tax. That if I had to do it over again, I'd do that after tax. Then I have a mobile home lending fund that I'm doing, a vacation property in Belize, and 2 office park loans, which are paid like clockwork until they didn't at the beginning of January. And so I'm not sure how those are going to work out. Now they're blaming it on coronavirus, even though they had problems before coronavirus. But all of these, even if that one fails, it has an office building that I will get a piece of if they don't pay the loan. And then I have a little bit of Bitcoin, and I'm going to add life settlements in there as well. So that's my qualified. And going forward, qualified will be for, as I said, long-term investments and lending. Now, my after-tax, when I first started doing this, over the last couple of years, I wasn't looking for cash flow as much. So I did a lot of the Buck Joffrey multifamily investments, which I talked to most of you about those, but those are basically recycling your money quickly. You don't get the cash flow, but you get the appreciation, and they force appreciation. So you get your capital back quickly and you can reallocate. So I'm doing 11 multifamily syndications currently. I'm in 9 lending that are in my after tax, which again, they probably should be in the other place, but I'm still kind of trying to shift stuff around. I am in 2 assisted living facilities that are the small ones, not the big box ones, but the single family homes that are turned into assisted living facilities. I'm in ATMs, which are basically a tax offset. Self-storage, I'm in one of those. I'd like to get some more. A small piece of farmland syndication, soybean farm that I just wanted to try out. It was like a $1,900 investment, so I was just seeing what it was like. It was one of those online ones. And then it started with my single family homes. I still have eight of those. I sold one last year. I'm selling another one this year. And then I said I have 3 tribes with TribeVest, 2 of which are investing in syndications, and the one with the net, we're still working on it, but I think there's a way that we can get into syndications. And then I also have a small investment actually in TribeVest. So that's kind of what I'm into. And as I said, I think my goal out of this is similar to Steve, is just to share some of what I've learned, because I was all over the place with my single family homes. Then I did multifamily, then I got out of multifamily. And then, I went nuts on my qualified account, just investing in any syndication I could think of. And now I have a plan. Now I'm meeting different syndicators. I'm figuring out which ones are investing for cash flow and appreciation, but I'm focusing on cash flow. I feel like the Buck Joffrey, those multifamilies are kind of my nest egg, where those are the ones that they'll pay off, but they're not going to pay off in the now. They're going to pay off 2-3 years down the road. So I'm glad I started there, but now I'm going to focus on the cash flow. And so that's why there's different, different syndicators have different strategies. And I think it's important to understand what the strategy of the syndicator you're dealing with. I've talked to, and the nice thing is the SEC rules, since these are all SEC products, you have to, when you sign up to talk to a syndicator, you're going to actually talk to the lead syndicator. They will set up an appointment and you'll have a half-hour call. That's how I met Buck. That's how I didn't realize what that was, but each one of these guys, you're going to get to talk to them and hear what they do, how they do it, and have your list of questions. So you ask the same ones to everybody, and then you can kind of figure out which ones you like and which ones meet your goals. And that's kind of what I've been doing. So that's kind of a quick overview of what I am. And I think also with this group, I agree with Steve that, flattening the curve so you guys have a better learning curve is part of it, because I made a lot of mistakes, and that's how, I think you each are going to have to do that as well. But if you can get some information from us, that would be helpful. And then also we can get some information from you and we can learn from you. So are there any questions on that? Good. I know that was a lot. Like I said, I was all over the place. I finally feel like I have some focus with my investing. But
one thing I want to mention also, I mentioned passive losses with oil and gas, but with the multifamily, and you probably have seen the K1s come back, Jim, but with the multifamily, because of bonus depreciation, you're getting a huge passive loss there. So for example, 2 of my syndications from last year that I bought into apartments, one of them, both of them were $50,000 investments. One of them I'm getting a passive loss of $40,000, and then I'm getting $44,000 passive loss on another one. So if you have any passive gains, that really can offset things. So the timing is also crucial in some of these. Maybe you don't want to put all your money into 2020 and 2021. You may want to spread it out, because as these assets sell, you'll have the passive gains. You may get 80% of your money on top of your money back. And so that's when you want to have some passive losses, of course. From my standpoint, actually, in part of a surgery center, so that's actually passive gain. So for this past year, because of those passive losses, I'm not going to pay anything in terms of my passive gains on that, on my income from that surgery center. So that saves me tens of thousands of dollars right there. So that's another nice benefit of being in these syndications, because it's just like you own your single family home, except you can accelerate the depreciation because they're doing cost segregation studies on all these assets. For the self-storage, I have not seen that. The 2 funds that I'm in for that, I have not seen any of the big passive losses on those. And I don't think any of the other, I think it's mainly the apartment buildings. Yeah.
Yeah.
I still have yet to see the ones from the resorts. So there may be one, because that one is a really huge value add. So we'll see. I haven't gotten that one back yet.
Yeah, that's I had some similar cost segregation, or the passive losses, and the one that I did, one of them, I invested 50 grand and I had a loss of 53, which was, that's great, because and if you don't use it this year, you roll it over to the next year. So that's why now I'm doing all of those type of things in my my taxable account, instead of, if you do that in your self-directed IRA, you don't get any of that benefit. So it doesn't really make as much sense. If you can do it in one or the other, you pick the taxable account. If you can't, then you still can do it in your IRA. But you might want to consider converting it so you don't have to do the UBIT tax. So yeah, any questions, comments?
I have a question.
Yeah.
And this is because I never think about this ahead of time. When you guys were getting into the syndications, how closely were you working with your accountant on these decisions? Because I normally jump in head first and then worry about the tax stuff later. So how important was that? How closely do you work with your accountant? And did you make any mistakes there that just the way you set things up in the beginning that, you can advise us on?
Steve?
Well, I'm kind of like you. I'm kind of like ready, fire, aim as well. I see something, I'm like, oh, that sounds great, and I'll just go ahead and do it. I figure if I get passive losses, that's fine because it just carries over year to year, right? So, but in terms of talking to my accountant about that, I kind of have lukewarm feelings about my accountant to begin with. So they're not real estate. They always say, well, if you invest in real estate, try to find an accountant who knows real estate and actually invests in real estate. I only know of maybe a couple in town who are like that. And I talked to one, and I think John hired, but he actually doesn't do accounting anymore. And then there's another one, I forget his name now, but I'm sure there are others. But and there's, you may have heard the name Tom Wheelwright, and he owns what's called Provision. He's probably in my opinion, one of the smartest accountants out there. And he's written a great book. What's it called? Tax-Free
Wealth.
Tax-Free Wealth. Yeah, it's a great book if you guys want to learn more about taxes. But anyways, I've applied a lot of that to what I've given my accountant and that kind of thing. So I think they're utilizing what I give them and try to take as many deductions as I can and that kind of thing. I don't qualify obviously as a real estate professional, so that kind of hinders me to a certain degree. But no, to answer your question, no, I've not done that, but I think I've been able to educate myself enough to know where I should be getting some, passive losses and that kind of thing that I can deduct. Cause I do go over my tax form when they finish up with it. And I kind of go with it, page by page and line by line, just to make sure that you've got everything in there.
Yeah, I didn't really consult my accountant either. Although last year I sold all of my multifamily properties. So and I didn't do a 1031 exchange because I didn't want to be locked into buying something, a bigger property. I wanted to do these syndications. So I spent last year doing a lot of the Buck Joffrey deals because they had the cost segregation. And what I was trying to do is get as much passive loss as I could get to offset the gain that I had. So that was, I first went and talked to my accountant and said, what do I do with all this gain? So I have to do a 1031 exchange, I have to do a qualified opportunity zone. And he had really good advice, I think. He said, you know what? Sometimes you just got to be happy that you made a bunch of money on a property and just pay the tax instead of trying to do all this fancy stuff that isn't going to pay off in the long run to avoid the tax. So then I found out the cost segregation, bonus depreciation, all that, and the syndications could help. So that's why I was last year just full on investing in those deals. And one more thing I'd like to say about, we keep mentioning Buck Joffrey, and I think I've talked about him to all of you. And the reason, one thing I like about Buck, and there's plenty of people that do this, is he kind of, he looks for and he vets all of these suppliers of syndication. So Resolute Capital is the oil and gas company. There's Reliant, I think he does with self-storage, and Western Wealth and these other companies that he does deals for. And he has a lot of pull with those companies because he brings so many investors. He can take down an entire 500 unit apartment building just with his investor club. So having someone like that is really powerful because they can connect you with investments. But what now I'm trying to do, and partially this is one thing I want to do with this group too, is I'm too tied into Buck. And so I want to diversify in multiple ways. I want to diversify by syndicator, so different syndicators. So if one has a bad year, has a bad plan, I'm not stuck in that. I want to diversify by location. So Buck is doing Dallas, Houston, Phoenix, Atlanta. So I don't have anything else. And then I want to diversify by type of investment. I don't want to be just multifamily. I want to be self-storage I want to be mobile homes, because they all are going to perform differently. And, you know, no one knew how, or still no one knows how this coronavirus stuff is going to pan out. But is multifamily going to behave the same as self-storage? Doubtful. There's going to be some disconnect there. And in none of those assets have I lost, you know, 30% or whatever the stock market's down, you know. So it might come, those assets might drop in value, but if they're still paying me cash, what do I care? And from what I've seen so far, you know, people are still paying their rent a lot more than I had expected. So, you know, I'm pretty happy with being in real estate. Any questions, comments? I think we're kind of winding down. If there's no questions, what I'd like to do is just hear from you guys. Was this worthwhile? And more importantly, do we want to do it again? And what kind of things do we want to talk about? You know, I know Steve and I can share some things from specific providers, or if people are really serious about looking to get into this stuff, what we could do is have everybody find one, you know, syndicator, one different syndicator, and just get a call with them. All you got to do is say, hey, I'm interested, and they will be jumping on you to schedule a call. I had 2 of those calls today, and then just share what you've learned about your syndicator. So that way we can all share information. And even for those of you that aren't ready to invest right now, it might give you an opportunity just to talk to somebody about syndications and hear what they think. So that was my idea. If anybody else has ideas for moving forward, if we want to do this again, and what kind of format, I'd love to get some feedback.
I think that's
Hey, Jim,
great. Yeah. Oh, go ahead.
Oh, sorry. I was just going to say, I think I'd love to talk more, do it again in whatever format, you know, coronavirus allows. I've been taking some notes, and so I've got some takeaways from today. And I think for me, something I'd like to see is sort of like, if you're getting started, the best way to do that. So I know that's personal to my story, but like what I would have told someone a year ago is, you know, to start with a small single family or something, you know, where you don't have to put that much money up if you're starting, right? Smaller amounts of money. So maybe understanding where someone can you skip straight to a syndication, or should you do more traditional real estate investing first? Obviously it teaches you a lot. Like you guys were sharing your stories. There's no school like the school of hard knocks when you lose a bunch of money. So yeah, maybe like more specifics on getting started. Although the thing you threw out there at the end also sounds like a good thing to do for one of our meetings.
Thanks. Chad?
No, I think the evening's been great. I think this has been fantastic to connect with you guys and hear the stories. I love the diversity of the group, that we've got some weathered veterans that have taken their licks through the years and learned. I'm kind of on the same boat as Jameson. I'd love to hear kind of with the current environment, maybe it's a little more of an unknown for everybody because we don't really know where it's going, but where do you guys feel safe that are more veterans that have been involved with this, that might be willing to, for newbies to follow along in too. But I like the idea of trying to connect with a syndicator and take a look at what we can. I'm all about trying to find ways to bring value. I think that's a great way to bring value to the group and see what might work out for the team if people are interested anyway, which I would definitely be interested. So I think it's a great start. I hope we keep it going.
Yeah, I agree. I actually have a call scheduled with who is it? Ashcroft Capital.
That's what I did today.
Oh, did you? Okay,
yeah.
Good. Yeah, so we can compare notes then when I'm done.
Perfect.
Sounds good. No, this is great setup. I think this is great to stay connected and just network with folks, and just trying to learn from each other and maybe even do some deals and some syndications ourselves. So I'm on board. This is good.
Hey, Tom, when you talk to them, ask them. Joe Fairless is the leader of the group. I don't know did you talk to him, Jim?
No, I talked to the new guy he's invested in a bunch of his deals. I forget his name.
I'm scheduled with Evan Pulaski.
Oh, that's not who Travis, I think I talked to.
Not Spencer. Wait.
Okay.
Anyways, Joe Fairless started out. He had no experience in real estate, and he took down a $7 million multifamily deal in Cincinnati. He had a lot of connections in New York and that kind of thing. But anyways, if you Google him, it's kind of interesting. One of the first things that comes up is a news story on him where all these apartment dwellers were complaining about the poor management of their property, and they're talking their floors were leaking and all this other stuff. So I'd be interested to see. I haven't talked to them, but I know of them. But Tom, you might want to ask them about that property in Cincinnati and what happened there, because I mean he's the ringleader of that group. So I'd be interested to see what the reply was to that.
Okay, yeah, I'll ask. Sure.
Yeah. So, but Google it first so you can at least see that story on the news.
Okay.
Interesting. Anybody else have any thoughts or comments? You're muted, Annette.
Yeah, I have one more. And I don't know if any of the resources you sent out prior included this, and I don't know how much you and Steve would be willing to share, but I'd be really interested in the value amounts, your investments throughout your syndication portfolio. Like you said, one thing was like 1,900. I'd like to see if you guys would share any of that. You don't have to tell us what they are, but is it 1,900 to 100,000? Kind of giving us an idea of how your syndication pie is kind of sliced and what those levels are in that.
Okay, yeah, that's pretty easy. I mean, the minimum that 1,900 was on an online farm acre thing. It just was I was kind of looking for investments and just tried that out. So that is not the norm. The typical is you can get 25 grand is typically bucks minimum but that's going up to 50. So it's a lot of them. So typically it's 25 if you can get it, 50 for some of them, and then 100,000 is a minimum for a few of them. But mostly it's between 50 or 100 I've seen. I know Ashcroft is 50 on the first deal and 25 on deals after that. Is that your experience, Steve?
Yeah, almost all of my deals have been 25 to 50. Most of them are 50. Let's see, the tech startup was like 5,000, so that wasn't that much. The Broadway show was 50, and then I actually am slated to invest in the London show that's coming up, and then the touring show in the US. So I reinvested another 50 total for that. So I'll be 100,000 in that for Moulin Rouge. So, but like I said, that's been a cash cow. I mean, if this coronavirus wasn't around, I mean, like I said, I'd have my money back within 2 years for that. And the thing about being in the original company is you actually get like all the CD sales, anything that has the t-shirts and mugs, all that stuff is actually included in that. Any touring show, any show in Australia, London, wherever, you actually get a piece of that as well. So that's what's kind of interesting about Broadway. But again, it's very, very risky. So, but the person that I've done this with is in the business. I think she was a Broadway actress at one point, and her husband was as well. Now her husband is a real estate syndicator, and I've actually done one of his deals, and Jim actually wants to bring him to one of the coin meetings. But anyways, most to make a long story short, most of the deals have been 25 to 50, and I don't think I've done any one deal more than 50.
Yeah, I was looking at the so another thing we could do if we wanted to for the next meeting is we could Steve, you and I could present a current deal that we're looking at and just kind of talk through it and show you guys what these the prospectus looks like, and we're not going to go into the fine print, but just the information on there. Or Steve, we could also, I'm sure, what's the Broadway guy's name?
Matt Pacini.
Matt, he's a great speaker. We could ask him not to talk about Broadway, but he also does multifamily. We could also invite him to come and talk to us and just give his spiel on how he looks at multifamily and things like that. He's a really nice guy. He lives in Boston. I'm sure he'd be willing to do it. So those are some ideas, and maybe I'll send around an email and get some feedback that way.
Yeah, I think he'd be very willing to talk. He's a great guy, and his wife is as well. So,
okay. Brian, did you have something?
Yeah, I was just gonna, we talked about some of these funds require you to be an accredited investor. So I wanted to make sure that was a topic we discussed around, what funds require accredited, what might be, you could get away with being a sophisticated investor, and kind of talk about that, or any other workarounds. I think maybe TribeVest. I can't remember if there's a workaround through TribeVest, maybe, or maybe not. But
Yeah.
I think that would be a good kind of discussion just around that space.
Okay. Yeah, we'll visit that next time. That's a really good one. Just to make sure everyone knows what we're talking about, accredited means you have income of 200,000 single, 300,000 married, or assets of $1 million outside of your home. So that a lot of these syndications you have to be accredited to qualify, but there are a lot now that are non-accredited. They're also changing some of the rules, and some investors take a little bit of both. And I think there's more chance that non-accredited investors could get into some of these than there was in the past. And I think that's going to continue to change, and they're continue to broaden it. But yeah, I'll put that on the list for next time for sure. Anything else? Excellent. Well, I will send out an email, and maybe we'll shoot for sometime in May to do this again. And I'll shoot an email with some ideas of what the topic could be to discuss. And then you guys can kind of give me some of your feedback on what you prefer, and then we'll just pick one and pick a date and go for it. Sound good?
And just one thing for homework, there's a guy named Jeremy Roll. I think I have a whole sheet on him on one of my things I handed out to you or sent to you guys. That guy is a wealth of knowledge. He was just on a 2 or 3 podcasts recently. One was Old Capital. One was, I can't remember the name of it now. Fear Free? No, I forget. But anyways, if you just Google his name, he's on a ton of podcasts. He's invested in, I think, almost 80 syndications. So this, and most of them are apartments. And he's a cash flow guy. This is all he does. So he's kind of like in Jim's tent. He just wants to get cash flow. But his, just the education he provides on those podcasts is great. So if you can just Google his name and just listen to a couple of his podcasts, he's just a wealth of knowledge.
Cool.
We should have him on the show.
Yeah, no, that'd be
be
awesome. I actually heard about him for the first time today, so I'm gonna definitely look him up and see if I can find some stuff on him. Because the guy I talked to from Ashcroft was talking about him, and this Ashcroft guy was interesting too because he's a full-time passive investor. And he got hooked up with Ashcroft just because he kept investing in their deals and going to their meetings. And then they're finally like, hey, do you want to call people up and get them to invest with us? So, you never know what can happen from these meetings and groups and networking. So, all right. I think if there's no other questions or comments, then I will go ahead and close this up. And we will, as I said, I'll send out an email tomorrow or the next day, and we'll plan for our next meeting and figure out where we're going from here. And if anyone wants to give me some feedback before that, how you like this to be changed, make it better, whatever, as always, please do that. All right?
Sounds good.
Sounds good. Thanks, Jim.
Yeah.
Thanks for coordinating.
Great.
Thanks, Jim.
Have a good night.
Jim.
See ya.
Bye-bye.
Bye, guys.
Bye. Bye.